have this very exuberant market where nobody thinks anything can go wrong, which is exactly the kind of environment that you need for a correction to occur. So it doesn't mean to go out and panic sell everything today. That's not what I'm saying. But you just have to understand that the risk is there. Could this market continue to advance through year end? Absolutely. Could there be a 3 to 5% correction between now and the end of the year? Absolutely. Just keep those things in mind as you manage the risk profile of your portfolio. Just be careful. Here's what you need to know before the bell this morning. Markets continue a very elevated advance here. Again, as we've talked about previously, the market dynamics remain extremely bullish right now, and we have a very sharp angle of ascent. And now there's nothing wrong with a sharp angle of ascent, except it's hard to maintain that over the longer term. But this kind of very accelerated rate here is just the consequence of a lot of money flooding back into the markets. Retail investors have been spending about $4 billion a day on stocks. They've actually just been a big contributor to the overall market advance as of late, along with share buybacks, corporate share buybacks, which are also running at about $5 billion a day. So you've got a lot of capital flooding into the markets on a daily basis. And again, that's not a bad thing. It's not a good thing. It's just what it is. But again, when we start looking at, kind of extensions and deviations, you do have very, very big deviations from long-term moving averages. Eventually, those deviations always correct. We had a very big one here. You had this correction. You're eventually going to retest these averages. Again, when these things occur, you always get these reversions back to the mean. It's just a function of gravity. But in the midst of the moment, as markets are rallying and kind of where we are now, it certainly doesn't seem that way. This market's just going to keep going up forever. And it certainly seems that way right now. But again, this is where risk is building in the market. Now, what eventually causes a reversion, who knows, right? Again, it could be a change in the political environment. The Fed comes out and says, hey, you know what? We cut rates once, but we think we're done for now, right? The markets are expecting 4 more rate cuts between now and next year. Lots of exuberance in the market. So when you have a lot of exuberance in the market, it doesn't take a lot to reverse that, particularly when you've got very, very overbought conditions of momentum and relative strength as well. Oh, by the way, this is a weekly chart. So it's much slower to move. To get these types of overbought readings on a weekly basis is a bit more difficult to do. And historically, when you've had these bigger overbought conditions, you do get corrective phases. Again, it doesn't have to be huge corrective phases. Again, some of these were a lot smaller. You were just running along the 20-week moving average. But you can get a 3, 4, 5% correction pretty easily when you have these kind of overbought conditions. But you're also set up for much larger corrections as well, like we saw back in 2021 going into 2022 was this is the 2022 bear market right here. But again, you had this a very similar extended overbought condition in 2021 that you do today. And again, same type of exuberance, same type of risk on attitude, no concern about market corrections. Remember, 2021 was very exuberant, SPACs, meme stocks, all that was going on. Everybody thought, hey, this market's just off to the races, it's never going to end. And then 2022 comes along, the Fed starts hiking rates, you have Russia. Those things happen. And that's exactly the same setup that we've got right now. We have this very exuberant market where nobody thinks anything can go wrong, which is exactly the kind of environment that you need for a correction to occur. So it doesn't mean to go out and panic sell everything today. That's not what I'm saying. But you just have to understand that the risk is there. Could this market continue to advance through year end? Absolutely. Could there be a 3 to 5% correction between now and the end of the year? Absolutely. So again, just keep those things in mind as you manage the risk profile of your portfolio. Just be careful. And particularly in a market like we have right now, where markets are being driven by a really much smaller handful of stocks, kind of big financial banks, the kind of the mega cap, AI stocks, etc. The rest of the market's doing okay, but it's not doing fantastic. It doesn't look like this, right? So just be careful with that risk. And particularly when you're chasing a lot of various asset classes that all have a very similar overbought condition and overbought structure as you do in stocks right now. So again, that's what you need to know before the bell this morning.